So with that out of the way, let's begin our session. If we talk about virtual banking, it seems a lot of jurisdictions have caught the bug. Hong Kong, Singapore, Taiwan, Malaysia, we all either are working on a virtual banking framework or have already completed a virtual banking framework. Just last week in Australia, their fintech unicorn Judo Bank has raised 230 million in the middle of a pandemic. So back home in Malaysia, Bank Negara Malaysia has announced that we'll be issuing 5 virtual banking licenses for either Islamic and conventional bank. And that has attracted quite a number of interesting players, including 2 of them who's largely considered a front runner in this race who's joining us today, Axiata Digital and BigPay, who I'm both customers of. And we also have Finastra and PwC joining us today to share their views. So maybe I will begin with my first question. Just a couple of weeks back, we also did a similar session in Singapore, and we also asked, in terms of COVID-19 and what are the impact on virtual banking in Malaysia, because we are seeing delays in our consultation period with Bank Negara. So maybe we'll start with Khairil, then we'll go to Marcus, then Navin, then Anand. Khairil, your thoughts on this?
So what's happened with the industry since the start of COVID? Is that your question?
Yes. What has happened? What's the impact? Is it a boon? Is it a bane? What are your thoughts on that?
I think so. Maybe kind of a quick description around what we do, because the answer to your question is actually depending on which part of the business you're talking about. We've seen some growth in some, and actually we've seen some decline in others, right? So obviously, Vincent, you will know this. Maybe the other members might not. We in our fintech business, obviously there's the micropayments business. It's called Boost. It's a leading wallet in Malaysia. But on top of that, we also do micro lending. That's through our company called. So they do small ticket loans, largely to micro merchants, and then we also have and through Esperasi we also do micro insurance. There are other product lines as well, but maybe kind of for the purpose of the impact on COVID, I'll talk about the 3 now. So obviously on the micropayment side, since the introduction of CO, a big chunk of the payments obviously disappeared because traders were forced to shut. So our offline segment within micropayments by and large disappeared. Obviously there were still some volumes coming from the large retailers, essential retailers, if you like, kind of the giants, the Tesco's and whatnot, that still continue to operate, and we still experience volumes from that. But if you look at some of the other smaller traders, the non-essentials, the offline volumes from that kind of went to a grinding halt. Within the micropayments business as well, we have very large online component that we saw fantastic growth. We saw a big growth in our bill payment and segments, because obviously everyone, they're sitting around at home, they need their telco product. They're subscribing more bandwidth and so on and so forth. So all those segments we're seeing a lot of growth. Obviously, it's starting to compensate for the loss in the offline segment we experienced at the start of the MCO. In terms of lending, we've kind of what most banks have done, which is that actually we've imposed a moratorium on repayment. And in fact, actually, in addition to that, we've also launched, I think Vincent knows about this, we've also launched a special fund. This is on a concessionary rate that we've gone out, built 150 million ringgit fund to support micro SMEs. And essentially looking at how we can actually fund their business, because actually the business is non-existent through the MCO period, and how we can give them enough financial capital to restart their business. That part of the business, I mean, it's very hard to tell whether that's doing well or otherwise. Certainly our loan volumes have grown. It's grown quite a fair bit. But, the is doing well is PLs starts coming in. You have a moratorium pinned down with so far enough.
Sorry, Khairil, we're losing you a little bit.
No. Oh, sorry. Okay.
All right. So Khairil, maybe maybe
Can you hear me now?
need to Yes, yes. Okay, we can hear you now. So you were saying that
Okay.
it's hard to tell now because you haven't been able to see the MPLs. Do proceed.
Yeah, so obviously the NPLs will not come in until 6 months from now when the moratorium period ends, right? But so far so good. I think when we engage with the merchant. And then final one is the insurance product. I think one of the things, microinsurance business, one of the things that we did very early on is we launched a COVID-19 microinsurance package. That one has grown like wildfire for obvious reasons. So in that sense, then it's a mixed bag of growth and decline. I think one of the things that worries us in general is the fact that private consumption in Malaysia has tanked, right? And the latest data I've seen suggests that private consumption has dropped by about 48%, presumably because the businesses were not open to start with, right? And that worries us a lot because obviously our business is hinged upon the general economy of the country, and therefore private consumption being a driver of that, we are quite worried.
Thank you for that. And on Navin's end, how has this affected operations and business in BigPay?
So I think we're fairly unaffected and insulated from this, which is a good thing. But I think fintech in general has been fairly resilient, I think. I like to think of it as like the Zoom of financial services. I think we're able to kind of service our customers and work remotely. So not that much disruption to our actual operations. Obviously, there's been a change to the way people spend. We've always been an open loop product. So we've always had a card that you can use anywhere. So we're not that impacted by the use cases per se. We're just seeing a lot more people move into online spend. We recently opened a new corridor for our remittance product. So we're finding a lot of kind of remittance volume is still there. So I'd say we're fairly insulated. I think we have we think Southeast Asia and particularly Malaysia will bounce back a lot faster than the rest of the world. So we're pretty bullish on kind of a recovery period and just sort of hunkering down and planning for that.
I think those are good points, right? Because a lot of people are approaching me and say, hey, Vincent, it's like this is the first real economic crisis that the fintech sector is facing. Like, are we going to have a bubble with fintech? But a lot of people don't realize it's not an all-encompassing word, right? Because there's so many different verticals within fintech that's affected differently. Even in Khairil's business, we see different lines having different kind of outcomes. Maybe for Marcus, you can tell us from a broader perspective on how you're seeing this affect like fintech and virtual banking in Malaysia at large.
Yeah, I think I just want to start off, I guess, with two quotes. One was Winston Churchill years ago said, "Never let a good crisis go to waste." So I mean, we have this great opportunity. I mean, obviously there's a human dimension to this. There's it's unfortunate for a lot of people, and there's a large anxiety among a lot of people. But we do have a crisis that's an opportunity to accelerate. And the other quote came from the Microsoft CEO that they've seen 2 years of acceleration, digital acceleration in the past 2 months. So what they were planning, to change the world and have an impact that would take 2 years, it's all been accelerated in the last 2 months. So tremendous opportunity, I think, for Malaysia in this case. I think you talked opening, Bank Negara has delayed some of the timelines that they originally set. We think that's somewhat unfortunate because there is a great opportunity here, although there are obviously a lot of other things. If you put it in the Malaysia context, and as you opened up that a lot of digital banking is happening around the region, the way I like to also phrase it is digital finance. To me, it's about digital financial services. So Khairil and Navin, they talked about the opportunity of insurance, investment, lending, and it's more than just banking. It's about the broader financial services offering. And I think if we look at it from Malaysia perspective, tremendous opportunity that we're only starting to see as benefit. PwC, we've done a survey late last year. We did it in Hong Kong, Singapore, Malaysia, about 1,500 people in each country. And Malaysia clearly stood out as the area in 3 areas. The first one was the most likely to go digital, the most open to digital. The second area was the most open to sharing confidential personal data to banks to be able to leverage, and also the most likely to switch, particularly in certain segments. So the opportunity in Malaysia is going to be significant. The other thing that I think in Malaysia that's interesting Those that get it right in Malaysia in the upcoming years, whether it's the incumbent banks or the future digital banks or the existing services, for example, BigPay or Boost, can get it right in Indonesia, Philippines, Thailand, Vietnam. Those markets are much closer to the Malaysia model than it is in, let's say, Hong Kong, Singapore, Taiwan, kind of an island mentality. So I think we're only starting to see the opportunities for Malaysia, for Malaysians. Obviously, Malaysia is going to be a much different market, and it's an exciting time.
Yeah, those are some good points. And since Boost does have a business in Indonesia, that could work out quite well for them, right? So let's move along to Anand. If you have any views to share, I think during the last webinar, you were talking about how when we are lifted with all this movement control order restrictions, we may see revenge spending. So what kind of trends are you observing in Malaysia on how this has impacted the industry, and what do you predict moving forward? Anand, go ahead.
Well, so good morning, everybody. So first of all, I think we should not discount. There's been a human element to this COVID crisis, and a lot of us have been affected by it, or family members and so on, right? So I think there's a human element which we should all realize we have a role to play in this. From a Finastra perspective, and what we see broadly across the ASEAN region, specific to Malaysia, is the crisis will result in seismic change in how people consume, how people spend across every sector, and obviously financial services is a very integral part of that. There's going to be a dramatic shift of how people do banking services or financial services. It is going to accelerate digital, the way I would use it. It's already been on the way for many years. It's going to dramatically accelerate it. What people are going to spend on, what people are going to consume in terms of loans, and that's true in Malaysia and everybody else, is going to be different. So the kind of fintechs that will come to bear post-COVID may be a little different from what was pre-COVID. And that's a very important piece, right? You have insurance that's probably going to pick up as a product. Travel, maybe not so much initially as a product. So you're going to have these patterns. And I do believe, especially in the younger generation, there will be revenge spending that will happen. That is just psychological, that's going to happen.
I know I can't wait to go out and spend some money, but let's hope things get back to normal the soonest, right? So I think when we look at Bank Negara's virtual banking draft, they were quite specific in talking about how these virtual banks need to address an underserved segment. So I guess my question to the panelists is, what specific gaps are this? What gaps are this that our incumbent banks are not able to fill, and how are the new breed of banks able to fill it? And specifically, maybe for Khairil, what is Axiata Digital's offering that can help to address this issue that Bank Negara is looking at?
Sure, Vincent. I think on the onset of our strategy to participate in financial services, one of the things that we recognized from day one was that on the demand side, there is actually a very large segment of the population which are either unbanked or underserved by banks, right? And actually, we did a study across all our markets, all the Axiata footprint markets. Indonesia, very attractive, but very large unbanked segment completely. Malaysia was interesting in the sense that actually the banks have done a very good job on banking with the general population. The problem was that actually there were a very large number of these customers that actually don't have anything beyond a savings account, beyond a CASA account, right? So it is, in that sense, underserved by the banks. And so by our estimate right now, if you look at the three main customer segments, the enterprises, the consumers, and we created kind of a special category called foreign workers. By and large, there is a very large bottom of the pyramid. There's very large unbanked and underserved segment within Malaysia. And we felt that actually the current banking business model, which is branch-based, which is ATM-based, which is very high touch, that business model cannot generate the kind of unit economics which can survive or which can sustain serving that bottom of the pyramid, right? Which is very low ticket, very thin margins, and so on and so forth. Digital technology could actually help bridge the gap and actually serve them in a very profitable way. And that's why we've designed this whole business to basically serve that. Boost, by the way, as we all know, it's a wallet, but effectively it's designed to be a virtual bank account, right? And once it gets to a particular point in size and scale, we would like to see a lot of those transactions kind of go in there. But if the transactions kind of go through that, then actually it's a very low cost means of providing financial services to the segment of population that banks cannot reach because of their current business model.
Thank you for that, Khairil. And I think on that note, you brought up how the incumbent banks, good in getting people into CASA accounts, but beyond that, they don't really have anything beyond the savings accounts. And Securities Commission Malaysia recently unveiled a new regulation which allows for e-wallet players to be able to actually distribute capital market products like unit trust. So a quick follow-up on this, and also the same question to Navin as well. Are there any plans to enable Malaysians to actually purchase these capital market products through your platforms?
Yeah, so
quick answer is yes, yeah. Oh, sorry, go ahead, Navin.
No worries. No, I just want to take it back to actually what we're talking about, the human aspect of this. I think if you look at the financial crises and kind of crises in the West, at least, you had a kind of bubbling up of the cultural consciousness and the relationship to banking and financial services and what that means for people. And I think we'll kind of see a little bit of that in Southeast Asia now. And people will start to rethink what it means to have a relationship with their bank. Is it purely a discount promotion mechanism that gets them into it, or is it something about how we treat people and how people bank with each other? So in terms of virtual banking, I think that can be applied to sort of say, how do we onboard customers? How do we give them access? So eKYC is a great step in that direction, but it's not a full solution. I think a lot of the solution is actually just understanding how people get onboarded onto banking systems, but that's not where it stops, right? It's the entire engagement through the entire financial life cycle of a customer. And I mean, rightly pointed out, like digital financing, there's a massive opportunity in Southeast Asia that virtual banks can kind of fill that. But, we do a very similar thing as well right now. We consider ourselves a pseudo current account product as well. We provide a variety of financial services on top of that. But the essence of what we're trying to do is to make sure that there's a seamless kind of journey and there's accessibility into that journey. So that's kind of really key for us. It's providing responsible credit models to provide responsible credit, not just to provide credit. And what does that mean? That the data underlying that and the kind of tech underlying that is actually the way to provide that model. So that's kind of the way we see it. And I think out of this kind of crisis will, I hope, emerge a little bit of a rethinking around what is my relationship to a bank and what does that mean? And so, yes, absolutely. Wealth products, saving products are going to become more important, definitely looking at that as well. But we're looking for the right kind of product and what that actually means in terms of interaction, access, and value, right?
And those are some salient points, right? Like when we talk about ethical financing, we kind of want to avoid the whole early day issues that we see with P2P lending in China, Indonesia, where we have all this very predatory practices. I think at the end of the day, we don't want to end up being an efficient digital along. We want to be a responsible fintech company providing needed digital financial services to the Malaysian population and beyond. So let's move on to Marcus. What are your views in terms of what virtual banking can fill in terms of gaps in Malaysia, Marcus?
Yeah, I think three things, and two of my colleagues had earlier mentioned. I mean, there's a couple of things that first need to be enabled. So eKYC, we need to get it out of the sandbox and get it implemented. That's going to be critical. Open API, phase 2 of the real-time payment capabilities, all that needs to be enabled if we're going to realize the dream. The other thing is going to be around education and training. Where we've seen markets be successful with new digital financial services, it's required across-the-board training, awareness, capabilities. So there's going to be a lot of investments need to happen by the regulators, by the players, by all the different stakeholders to help people understand what is the potential. The third area, these new services, these new digital financial services are only successful when you get the right partnerships. So one player cannot do it by themselves. They need to have these consortiums. And we saw that in Hong Kong, where all 8 of the successful applicants they were basically largely consortiums. The known bidders for the Singapore license are largely consortiums, and we see that elsewhere. So if you get those 3 things right, education, the enablement technologies, and the right consortiums and partnerships to put together a value proposition. So what's that going to mean? I think it's going to mean a lot more, and it doesn't necessarily have to be app-based, but it's going to be a lot more merchants suggesting, like in China, pay with your QR code, right? Every time I go to China now, I've never had to use credit cards or credit cards, but I never had to use cash anymore. So creating that whole ecosystem to nudge both the consumers, but also the businesses. I think the other thing to point out, Bank Negara has made it clear, the unbanked, the underserved, and the micro SME market, but they've also suggested and implied that it's got to be for Malaysia. Malaysia capabilities, likely built by Malaysia intellectual properties. So there's a significant opportunity for Malaysia, again, to build up the capabilities, again, throughout the region. So education, consortiums, enabling technologies, and sure that it's done in Malaysia.
Cool. And it's interesting you brought up Hong Kong, because out of the 8 banks, like you said, 7 of it is all consortium. And I think only VLab is a standalone and pure play startup. And that's quite an interesting dark horse that I'm observing to see how they will fare against the other 7 giants that form a consortium. Moving along to...
Right? They have an implied consortium with their broader network from China. So,
yeah.
I mean, again, the whole partnership network is already in place.
Yeah, true. So moving along to Anand, what do you think are the gaps that virtual banks can fill in Malaysia? What are you observing?
I think the panel kind of summarized it very well, right? Both on the demand side and the supply side. On the demand side, there is a need for both the underbanked segment to be filled up, but also a wide range of products and services, which is really far beyond what a traditional bank can offer. On the supply side, it's exactly what was mentioned, the consortiums. It's a platform that enables this, right? The successful players will be the ones that use technology to the hilt, technology in terms of artificial intelligence, technology in terms of having a very good platform in which they can plug and play a lot of fintechs to offer virtually a store back to the consumer, a store that makes value at each end of the customer segment. So at Finastra, that's really what we are being focused on, right? A core banking in the cloud proposition with our Fusion Fabric.cloud platform that enables the foundation for these local fintechs. We've been working with Onyx Bank in Philippines to essentially have Filipino fintechs plug into this modular thing to provide, and obviously a lot of IP in artificial intelligence. We didn't talk about that piece yet, because that really allows the newer players to provide for new products, new services, new segments. It's this combination play, that's what I'm going to think is going to make it successful. This is what, for example, Alipay, WeChat have all done in China. This is what the consortiums will do in Singapore, Hong Kong, and everywhere else, right? And this also ties back to what Marcus said, the point of being local. And in fact, today we have both BigPay and Axiata are examples of stellar Malaysian local success stories, right? So I think it's going to be a combination of the global and the local element coming together with the segmentation to really make it happen.
Vincent, if I can add just to the additional point.
Sure, go ahead.
The additional opportunity is with the incumbent banks to change. I mean, we saw that in Hong Kong. So innovation, disruption. Singapore's made it clear, the regulator made it clear that they're looking for innovation, not disruption in the market through the digital licenses that they're going to issue. But if you look at what happened in Hong Kong, it's quite interesting. Some of the larger banks have waived fees, something that was critical to their P&L. They're already changing. Another bank offers now multi-currency credit cards directly in response to the offerings among the digital bank applicants there. I would argue that we haven't really seen a disruption in Malaysia in 20 years, since when the 57 financial institutions all merged into the 10 anchor banks, which was about 20 years ago. I think the Malaysia opportunity is quite significant for that disruption now, or that innovation. And I think what we're seeing with the e-wallets has already inspired many of the banks to jump on board and offer the equivalent services. And once we get that broader ecosystem together, then we're going to see the incumbent banks be much more aggressive in offering services, products, different ways of doing digital financial services to their own existing clients, customers.
Yeah, on that note, I mean, I believe it was ZA Bank who was giving out 5% per annum for their deposits product. So if BigPay and Axiata is looking at that kind of rate, let me know. I'll be the first to sign up for your services when you guys launch.
Yeah.
So moving along, we have some questions from the audience. One from Dato Azrin from Sedania, who's asking, how do we address the kind of boomer population, the civil servants of the world, on adopting this kind of digital services, because they're not necessarily digital natives, right? So maybe Khairil, you can shed some light on that, and Navin, you can shed some light on that, and then we'll go in the same order again. Khairil, go ahead.
It's becoming a habit now that I start first and then okay, so it's a great question, and I think certainly if you look at our merchant base, I don't know whether you've sort of been shopping actually prior to the MCO period, but you'll notice that actually there is a segment of Boost merchants that we've acquired. These are, if you like, your street hawker vendors, kind of the smaller mom and pops. And one of the things that's quite encouraging about what we're starting to see there is that actually that entire segment largely are run by boomers, right? So if you look at the vast majority of youth today, chances are they're not going to start a street corner nasi lemak store. It's actually their moms or their dads that's doing that, right? Or the smaller mom and pop grocery store. That's more the boomer generation. We're starting to see signs that actually they're starting to adopt it, and I actually think that COVID-19 is potentially a little bit of a game changer around that, largely because that people are starting to view cash as actually a transmitter of a potential transmitter of the virus, and so they're looking at sort of cashless adoption as a way to kind of prevent the spread or the spread of the virus, right? And so we're starting to see more and more people sort of take up, despite the fact that the boomer generation, are they going to be utilizing the full suite of offerings? I think so far it's been a real challenge. We've tried many different ways, but as long as we can kind of find a little bit of a bridge between the merchant side and the consumer side. Yes, the consumer side will largely be, if you like, the younger generations, the Gen Zs, the millennials and whatnot, the first jobbers. And then if we do a good enough job in attracting the boomer generation, especially on the vendor, the merchant, the trade side, then we would be able to sort of at least get them on board. As CEO of Boost, I still struggle to get my parents to become big users of Boost, right? They still insist on going to the post office to pay the telephone bills. I don't know why.
Our parents are always the toughest customers, aren't they?
Yeah.
Navin, on BigPay stand?
Yeah, I totally agree with that. Obviously our base is pretty young, early in their financial life cycle, but we do have people that are above 80 to 90 years old. I won't say the exact age to kill me. But I had an interesting conversation with my friend in India, and he was saying during this lockdown, his parents just immediately switched to an e-wallet and immediately started ordering food online. And they'd never done this before. And anyone that's walked into an Indian branch knows that it's like walking into your family kind of home. Like you get your tea, you spend like an hour talking to someone about their life. So I agree. COVID is probably going to change the way people interact with things. And don't discount the paradigm shift that can happen when someone quickly flips. It's really that inflection point that's the hardest to get people over the hurdle on, and we find that with all our products. But once people are over that hump, they immediately start like kind of using the digital product quite quickly, and you'd be surprised how quickly people can actually cross that kind of digital chasm. Even my parents, for example. Yeah.
Cool. Thanks for that, Navin. Marcus, what are you observing in this space?
Yeah, I think
in terms of how.
Very, very interesting question. I think if we look for anecdotal points, and I think there was some actual factual points in Japan. Japan has a much larger, older, higher up pyramid of users. And one of the things they discovered is that a lot of people didn't understand that they can do this. So it goes back to the education and some nudges and incentives. And one of the things they discovered is that people didn't think that mobile devices, your internet on the PC and the branch, that they were the same thing. And we found that more people trust their mobile devices than their PCs. They saw internet banking and mobile banking as two separate. They saw internet banking as being dangerous, crypto, mobile banking dangerous. But mobile was something personal, close to them. And so when they started nudging people to go to mobile devices, something that they felt was personal, they saw a significant spike in the branchless type transactions or interactions. And again, it was a combination of education, nudging, and understanding that the older generation is really the impetus for helping actually the next generation start using this. And especially in Japan, where everything is based on cash, and you start with the older generation to move it cashless.
Yeah, and Japan has one of the largest senior citizen population in the world, so that's a pretty good example to bring up. And then I think like you've worked with some virtual banks like Tonic in Philippines, where they try to address the underserved, they try to address the older population. What are you seeing from your customers in terms of getting the non-digital natives to adopt to this kind of digital technologies?
I think just to add on to what the other panelists have said, I think the big focus needs to be on the user experience. If you make it really simple and really compelling, they will use it. Even the older generation worldwide uses FaceTime. They use WhatsApp. They use Google, right, on their phones today. It's about the simplicity of the experience. If we can make and show that our banking journeys, our user journeys are very simple. And that's what we have been working with banks like Tonic, Rever in the UK, which is totally focused on a population which is a little higher, a little older, and a couple of other digital banks. It's a lot about the user experience, and it's about the training and the shift. The shift from perception is going to happen. The shift, you make it simple, people will come to you. I think that's really what we in Finastra focus on, is that simplicity of the experience that really makes it easy for people working with digital banks to make that happen.
And that's a good point, right? Like the user experience, the simplicity. I mean, when we think about digital things, digital tools, WhatsApp is a digital tool, and we see a lot of very old people using it because it's simple and has a value proposition for people. So I guess that's ultimately it as well, right? The segues nicely to
two additional points.
Yeah, go ahead, Mark. Go ahead, Marcus.
The survey that we did of the Malaysians, and again, this is always unique to Malaysia, we saw two groups most likely to switch into digital banking, digital virtual banking. And there was those over 10K a month, earning over 10K, and those over 55 years old. And what we're finding is those that are over 10K have more services, probably a little bit more aware of the offerings out there. But those that are over 55 are less likely tied to a bank because of their employer, right? And in Malaysia, what we're seeing is a lot of people are tied to a bank or bank services because their employer suggests they get their salary one day earlier if they're tied to that particular bank. Those that are over 55 are less likely. Educate them, more of an incentive for them to switch because they are less likely to have to stay with the bank that they may have been with the last 30 years as well.
That's a good point. I think we should dive a bit into that later about primary accounts, because I think even in the UK, a lot of the neobanks are struggling to make their services the primary account. But let's dive into that a little bit later. We do have a question from Hizam over here that's relating to financial inclusion, which is a big focus of Bank Negara's framework, right? So a lot of these initiatives, Hizam has observed, is happening in urban settings. So how are the new breeds of bank able to kind of address this underserved segment in the rural communities? He pointed out, like, for example, a yellow bank in Malaysia, a big one, not pointing names here, don't even have their app in Bahasa Malaysia. It's only in English. So what can the new breed of banks do? Khairil, do you want to take that? No. Navin? What are you guys
I'm
doing?
happy to take it. All right, sure. I'm happy to take it. Look, I mean, for me, I think like a clear distinction is being educated doesn't mean you're financially literate. And so I think you need to see those two things as very different. Socioeconomic kind of status and financial literacy may not actually overlap as much as we'd like to think. So we really like to focus on how do you build that intuitive experience? And obviously, because our platform is sort of built in a modular way, we can add pieces. So yes, we can start moving into Bahasa, we can start moving into Bahasa Indonesia, Tagalog, etc. That's an easy reskin to do, but that doesn't actually solve the fundamental problem of why are these people not served in the first place. And part of it comes down to access, right? So there's putting a product in front of people, and then there's getting people to understand how to get onto the product. And so you need to solve both of those problems at the same time. We deliver cards to really rural parts of Malaysia, for example. So there's some guy with a backpack taking out cards like into the jungle and giving a card. It makes me really happy to kind of know that, right? Because our app is in English right now, but people are still using it. It's intuitive enough that it should be as intuitive as an iPhone, right? Or any smartphone today. You shouldn't need to really you should be able to gesture your way through and understand things. And you should be able to fundamentally understand the financials in the same way. You shouldn't need to have an investment broker or have to spend an hour with you and come out of that not understanding a single thing about how to invest. Right? So these are things that actually require both a tech solution, but also a product solution and also an interface solution. That interface solution is actually the mindset, right? And this is the difference, I think, between digitizing a bank and creating a digital bank is actually that inflection of how do you break that initial mindset or framework that you started out with, and then how do you build on top of that kind of first principle assumption that you now have. And so that's kind of what we try to do with BigPay. We said, look, we've never run a bank before. We don't know what that's like. Let's take away the preconceived notion of what a bank should be, not what a bank would be, but what a bank should be. And let's make it relatable to us. And so the first people that we were experimenting with were ourselves. We were like, do we like this? Can we understand this? And that kind of applying that first principle approach to financial inclusion is, I think, the way that you solve it. You don't treat it as a broad bucket. You don't treat it as a high level kind of objective, but you really get into the details of why something isn't applicable to a person in any given moment. And then you start to back solve for that problem. But you can do that with tech a lot faster than you can with anything else because you can move your tech in a modular way.
Thank you for that. And Anand, what have you observed in terms of how digital banks are attempting to tackle the more rural communities?
So I think the key pieces to it, right? One is really around the business, technology, and the financial model. From a business, the way we see digital banks, for example, Tonic in the Philippines, Yoma in Myanmar, and so on, what we see is the business model keeps evolving. They keep pivoting the business model as they see what success looks like. For example, if the government says there's a lending moratorium, you can't deliver repayments, there's no penalty for repayments. It's the financial model of the digital bank, very badly. So the bank has to be very careful in how they go after these populations with what kind of product, which is the business piece and that what kind of partnerships. With Yoma, we see that with Telenor. With Tonic, we see that with a few rural banks in the Philippines and so on. So there's that combination there. From a technology piece, it's all about Lego blocks, right? It's about assembly of Lego blocks. The way I see it is today's technology, you have to take banking, financial services as a proposition of Lego blocks. You assemble them to order. You change those Lego blocks as you move along and provide the right user experiences, right? And that's really what at Finastra we want to enable with our core banking and our platform FFTC proposition is those Lego blocks. Because we do not know what shift happens in the business model, and we do not know what shift happens in the financial outcomes digital banks derive as well. Now, our basic thesis is you provide these blocks, it helps both. And hopefully, many of these Lego block combinations will result in the right product mix to both satisfy the end consumer, do social banking in some way for the underserved population, but also make it financially viable for the digital bank. Otherwise, it tends to be a completely loss-making proposition.
On financial viability, there are several questions on that. So let's jump into that right after we get Marcus to also share his view on how digital banks can address the rural communities. Do share with us, Marcus, what you've heard from your other PwC colleagues around the world, what's happening. Go ahead, Marcus.
I think there are two areas to explore. One, I talked earlier about creating that ecosystem of partners, but there's also an ecosystem of customers. And one of the things, again, going back to our survey, we found that there's two unique groups in Malaysia that could benefit. Those savings associations, people that band together and work together, and car owners. And in fact, car owners was a group that was double Singapore and Hong Kong in our survey, of people that there's an ecosystem of customers that we can bring together with some common financial services that address the educational elements, but make them feel a sense of inclusiveness. If you look at the number one challenge that you have with digital banks is profitability. And people say that the opportunity there is that they don't have the infrastructure costs of the branch network and maybe cash handling that the other banks do, but they do have the challenge with customer acquisition. The customer acquisition costs are multiple times higher than the incumbent banks by brand building and awareness. If the digital banks can address that customer acquisition costs, and we see lots of examples of that through affinity groups, for example, then that's a catalyst for them, to be profitable, but also to launch innovative services.
That's actually exactly one of the questions that the audience asks is how do you actually drive down the customer acquisition cost, right? Because that could be an expensive affair, which then saw Singapore putting specifically in their guideline like not to engage into value destructive behavior, right? Mm-hmm. And so I kind of want to combine that into one question because there's another question that's asking about funding in the time of COVID-19. So number one is how do virtual banks find the fund to be able to run a virtual bank, number one? And number two, once they do begin, what kind of steps can they take to drive down the customer acquisition costs? While you're still on that topic, Marcus, maybe you can shed some light or share some views on that.
Yeah, I think, so three things. One is what I think a lot of, we've seen a lot more interest, and also the regulators have told us there are a lot more interest in the bank, in the Malaysia license, digital bank license, than there were in other places. And I think partly is because the capital requirements to start with are far lower than there was in other areas. So the need, clearly there's a much lower capital requirement as the guidelines have been issued so far. That means the cost to open and start a digital bank will be far less. I think, again, I would go to these affinity groups. If you are trying to offer higher interest rates and you do it at very limited time, I mean, that's a great marketing gimmick, but you need to be able to identify target customer segments, have a very compelling offer to be able to bring them into your ecosystem of partners so that they don't have that high acquisition cost and that high servicing cost. And if you can address the servicing costs and the acquisition costs, then you, with a targeted segment of customers, with what we call a customer value proposition that's focused on that. And there are many. There are, civil servants, for example. That's a very good target segment to go after. Students, universities, that's a very good target segment to go after. Hawker stalls, go after that, to take the backpacks and service them. But those are all very good segments to work with to be able to address that.
All right, great. And anyone else would like to add to that in terms of funding the business, driving down the customer acquisition costs?
So we're probably not a good example of driving down acquisition costs. Obviously, I think everyone knows that no, but to be fair, I think this was something that we had developed as a business plan from day one. That maybe kind of borrowing a term that Marcus was using, affinity groups, right? The largest affinity group within our group of companies is obviously the telco, right? Celcom has about 10 million users for us to tap onto, right? And so very quickly we saw kind of how Boost was going to be able to try to tap onto that very large user group within Celcom. The good news obviously is that if you look at our base, it's a combination of Celcom, Maxis, DG, U-Mobile customers. We've kind of penetrated the whole group now. But then from the context of the bank, therefore, we always saw that this was Boost, if you like, was the starting point. We would bring in a lot of the users, and then we will find ways to provide other financial services products, right, to draw upon that relatively large, relatively high acquisition costs that we've spent to be able to kind of bring them all in, right? And so right now, if you look at our business today, yes, our financial services business is a little bit more geared towards the underserved SME segments. Largely because I think their ticket sizes are a little bit higher than the consumer ticket sizes, number one. But number two, also that if you think about something like lending, the guidance, if you look at Malaysia's debt to GDP ratio, it's a little bit out of whack right now. And so we feel like providing a lot more consumer loan might not be the right thing for the country right now. And therefore, we want to kind of gear it towards a little bit more productive loans, SME loans, right, to help them grow their businesses and whatnot. So from day one, it's always designed in such a way that we were going to spend this, and then we were going to find financial services to try to drive that. Today, that model is working quite nicely for the micro SMEs right now. In terms of funding, by the way, I mean, one of the things that I guess this is perhaps slightly different view from, or maybe kind of a counter view from, say, what Bank Negara may have been intending to do. We felt that actually the minimum capital requirement was a bit too low. And the reason why we wanted it to be a little bit higher is because we wanted serious players to come into the picture, right? I know that this may piss off quite a lot of people in the audience right now, but there are a lot of fintechs who believe that they can actually do it. But this is serious business, right? You are running a bank. Yes, it's a virtual bank, and yes, there are a lot of different things that you can do about it. But this is still serious business. You're going to have a very large consumer base, a very large merchant base, a very large partner base that you're going to be dealing with, right? And it's not for those who don't have the capital base to be able to be wanting to do this, right? And so that's why we felt that actually the capital requirement should be a little bit higher, such that we can actually create sustainable virtual banks coming from here.
I think you're going to get a lot of hate mails after this, Khairil. I hope you're ready.
I'm pretty sure. Yeah. Maybe I point to add to that, Vincent. Maybe a point to add to that is therefore, going back to what Marcus said, the consortium model becomes very important, right? Because even from our perspectives, we cannot cover every single part of the of the customer value proposition. And we are, and I think you know this, Vincent, right? We are already in talks with several small fintechs on figuring out how do we partner together such that they can cover certain segments of needs that we are unable to cover, right? But my point was more in terms of the shoring up of a capital base to go after this business.
Fair points. Before that, I think Navin wanted to go ahead first. So let's get Navin to share.
I totally agree with Marcus. I think for me the capital requirements are just about right. Obviously, selfishly, we think that we're a pretty decent competitor, even as a standalone business for virtual banking, because we've kind of done things that are virtual banking like, or we try to create pseudo virtual banking products. And as a phase one, I think those capital requirements are, to us at least, just about right, to just kind of have an explorative phase one trial into it. And I think Malaysia has really carved itself out versus Hong Kong and Singapore, just based on the framework they've had. I think Malaysia's always been very supportive of e-wallet players and digital players, and I think that kind of comes out in virtual banking. On the point of not paying for customers, I think we by nature had to do that just because we haven't had that much of a cash pile. But I'm really happy with that because it really forced us in the beginning to say, what are we doing first? Product, product, product. And we really focused on getting a really good product out into market. And our first customers were like friends and family. And trust me, you need to convince friends and family to take your product up. You know, like you've got a problem. So we spend a lot of time talking to our friends and family. Why don't you like it? And they'd be like pretty honest with their criticism. They'd be like, well, this is just, this is crap. Version 1 is just crap. And so that really got us to innovate. And we've still got that in us. I think it's in our DNA, that kind of startup mentality and mindset, which is we don't pay for customers. We don't take customers for granted either. So once they're in the funnel, don't expect them to stay. Don't assume that once you bought them or once you've got them in your funnel that they're going to be a customer for life. You really have to keep working to engage your customers, and you really have to give them a decent product. And it can have bugs. It can be glitchy. I think people are very forgiving. In Southeast Asia, in particular in Malaysia, they will forgive you, but you need to show them that you're improving. You need to show them that you're making progress. So.
Thank you for that. Before we jump into Marcus, I just have one quick follow-up question for you, Navin. Given that your parent company is severely affected in this current crisis, is that impacting your funding? Is that impacting your journey to being a virtual bank in any way? Just a quick question on that, quick answer for that.
I mean, it's obvious that airlines around the world have been impacted, and AirAsia is not going to be out of that list. I think AirAsia is obviously one of the most profitable airlines in the world, and they've been really prudent and intelligent about the way they've conserved their capital and what they've invested in, bluntly. So they've got a pretty diversified portfolio. So in terms of capital, I think AirAsia is in a pretty strong place, and I said Southeast Asia will probably recover a lot faster. We explicitly, from the very beginning, have made sure that we are not tied completely to the AirAsia ecosystem. So we're not just a travel card. We're not just an airline card. We were very specific early on in our business model to diversify. So in that sense, we both are able to kind of, and I think that's true for a lot of AirAsia's digital businesses, is this need to diversify outside of being purely around the airline ecosystem because of times like this, where you have one kind of economic event that can kind of wipe out, your ecosystem or your relationships, and so you need to diversify your portfolio. So that's what we've kind of done.
Yeah. Okay. Moving along, Marcus, you wanted to add something earlier with regards to the whole customer acquisition cost and funding the business. What did you want to add? Go ahead.
Yeah, I just wanted to extend actually what Navin and Khairil had said, that once you reach this critical mass of customers, and particularly on the funding model, so Khairil, when you get those micro SMEs and you make those loans to them, starting to use data to start linking their customers to those customers, and you start building that ecosystem so that people, positive feedback loop increases the overall capability, but that requires the use of data. One of the things that I've seen in this crisis recently is a lot more emails of banks linking their customers, whether it's restaurants or shops, sending me all sorts of messages saying, get your food here, get your services here. But that's clearly them helping their customers with their customers, so linking customers. So I think it would be interesting to find out from Navin and Khairil the ability to use the data to be able to link those customers together.
Okay. Yeah, I guess that's something to look at as well, using that. And technology is a big part of the cost of running a virtual bank in lieu of the physical networks not being there, right? So on that note, on the technology front, or maybe from other angles, and then how do you see virtual banks driving down their CAC? How do you see them funding their business?
Sure. I mean, what we have seen, and we have worked with a lot of virtual banks worldwide, and what we have seen is their cost-to-income ratios tend to be quite low. Traditional banks, once you take out the acquisition cost, and even the acquisition cost, once scale happens, it really starts reducing, right? The curve really flattens out, to use a very topical view, for the acquisition cost as well. Now, what we see is because the bank itself is built in a very modular Lego block fashion, and that's really what we work with these banks on, right? Using our platform, FFPC, and our co-banking solution. So this itself and on the cloud reduces your operating expense dramatically. It becomes all digital, all straight through processing. Marcus really talked a lot about eKYC, right? That reduces your customer acquisition operational cost. If you see the marketing and then the processing piece, the processing piece with KYC reduces a lot. Use of intelligent data and artificial intelligence allows the digital bank to surface the right products, the right segmentation, instead of offering an entire catalog. That again is huge cost reduction. Right? There are a lot of both top line and bottom line benefits that modern technology brings in. And the most important part is what Khairil spoke about, right? No bank is an island in today's world. It is an assembly of fintechs which really go back to provide a compelling value proposition back to our customer base. And that's very important. That's really where a platform comes in place, where they can plug and play these into and provide a very compelling user experience. And simplicity wins. You have a simple user experience, that's going to win. And that's what is going to make the consumer sticky to you. And that's what's going to make the digital bank win in the long term. So I think these are a few key tenets of how digital bank, really speaking, can reduce their cost to income ratios dramatically, be successful, and have the right segmentation approach in the market.
On the topic of cloud, right, there are several clarifications that's coming from the audience, and they're asking if they try to clarify what is the regulator stance on cloud computing for banking in Malaysia. Do you have any insights on that, Anand?
Yeah, I mean, we have been working with BankNag around clarification with our partners, Microsoft Azure. And it's very clear that they are becoming more and more open to it. Once they see that we can maintain data residency in the country, once they see that we can maintain the same levels of service, the SLAs, provide a much higher security because you're using a very industry standard hyperscale cloud provider. You made these three tenets: increase security, data residency, and same or better SLAs. And modern cloud technologies provides for far better, more sophisticated SLAs. The regulators say, yes, it's eye-opening. It's happened in every industry, right? People use Zoom today. I mean, why do people use Zoom? It's very simple. It's very easy. Turn it on, turn it off. And that really drives down the cost income ratio. That's what really at Finastra. Our focus is cloud first, platform first, ecosystem first banking platforms that really helps this seismic change happen.
Okay, thank you for that. We don't have much time left, so I'm going to slip in one question of my own that I'm quite curious about, right? So I've been looking at this virtual banking thing for quite a while now, and I don't think I've observed in any other country where state governments are also wanting to bid for a digital banking license. So if I remember correctly, it was the Johor government and Sarawak government who both said, hey, we want to get a license for this too, Bank Negara. Does anyone have any insights on that? Have any of you observed this in other markets, and what do you think the propositions are for this kind of state-run digital banks? Anyone can feel free to take this if they have insights on it.
It's always a difficult topic to address that particular one. But Sarawak state government already had a financial services offering. So it's really just extending something that they already have to support, again, their ecosystem of citizens in Sarawak.
Okay. All right.
It's similar to what Marcus is saying, right? I think if you look at, say, in Malaysia, there are several states where they have, credit corporations, credit agencies, and so on and so forth, that is actually in the business of handing out loans. Those, obviously would benefit from having this license, because obviously they can then, if you like, deploy quite a number of different extended value propositions beyond just what they're doing today.
Okay, cool. We unfortunately don't have any more time left to take questions. We have over 50 questions, so really, really engaging crowd. That's great. Yeah. So with that, maybe we'll just have a closing thought from each of the panelists, less than a minute to summarize your whole view on this. While you're still here, Khairil, why don't you share with us what are your final thoughts on this?
Just a thought, a kind of a more personal thought that we are actually very excited with this opportunity. I think it's going to be a game changer in the landscape in Malaysia, largely because it's going to open up a huge customer pool that hitherto has not been touched. And what it will then inspire is to hopefully get the banks to also sort of adopt some of these virtual banking practices to kind of then drive towards the innovation and the disruption that Marcus was talking about. So largely speaking, I mean, like, we're very, very bullish and very excited about this development.
I'm also excited about the potential of 5% per annum. So let me know on that.
Our deposit mobilization plan is already in place.
Navin, what's your closing thoughts on today?
I think it is an interesting time. It's interesting to see what the cultural reaction to financial services will be at the end of this. I think there are two large cultural shifts that will happen. I think one is already happening is the relationship that people have with their personal data, and what does that mean? And how do you give people back their personal data in a way that adds value to them and not necessarily is being sold out to third parties too much? And then in that confluence is what do financial services mean to me now that it's more important to me and more in my cultural core. So the inflection of those two things is actually quite an interesting thing that I think we'll see more of in the future.
Wonderful, well put. Marcus, Anand?
Yeah, so just real quick, I think it's exciting time for Malaysia. I already start seeing changes. We saw Bank Negara release the RMIT. We already have customers that have put customer data in the cloud that's located outside of Malaysia. We're helping other customers with their approval processes for customer data for critical systems. So things are starting to change. So I think great opportunities, not just for the banking environment or financial services in Malaysia, but just for the broader technology, fintech environment in Malaysia. For that, I want to thank you and Finastra for sponsoring today's session.
Thank you. Anand, what are your final thoughts?
Finastra has been a partner with the Malaysian financial services industry for over 25 years. And we want to continue that partnership as Malaysia moves into the new digital banking era with our cloud bank platform that can enable fintechs and really bring in both the underserved in Malaysia as well as the lower bank segment back into the financial services frame itself. So we will be fully committed. In fact, we're doubling down on Malaysia as we think there's huge potential, and we want to be a partner in the next 20 years of banking with Malaysia.
Great, thank you for that. And with that, it only leaves me to thank everyone for joining us today. We hope you guys had a very fruitful session and had as much fun as we did. And also to thank our guests today for taking the time to join us. Thank you, and goodbye, everybody. Have a great day.
Thank you.
See you all.
Thank you, guys. Thank you. Thank you, everyone. Bye-bye.
Thank you.